The Wall Street Cat is in the house. Although the Wall Street Cat focuses mainly on publicly traded companies, it is inevitable that we will not discuss a long-awaited initial public offering (IPO), which will be a fact in the very near future. Airbnb is expected to go public under the symbol ABNB this December, and this 16th of November, Brian Chesky delivered the most information about the performance of his company so far. Let's go through the numbers quickly. For the first time, Airbnb reported a profit of $219.3 million this third quarter of 2020, with sales of $1.3 billion, beating the loss of $575.6 million on sales of $334.8 million last quarter, which I dare say is due to the explosion of the COVID-19 pandemic. Not surprisingly, sales for this third quarter are 18% lower than for the third quarter of 2019, but when compared to sales of Booking or Expedia, which also reported declines of 48% and 58% respectively compared to sales in the far more touristy 2019, we can conclude that Airbnb is better able to cope with the pandemic than the competition. On annual basis, however, things don't look so peachy. In the last 9 months, Airbnb has made only $2.5 billion, which is 32% less than sales in 2019, approximately $3.7 billion. In terms of profits or losses in this company's case, last year they were $322.8 million, and this year they are double, namely $696.9 million. It is also important to mention that Airbnb makes a total of $4.6 billion in sales throughout 2019, which again, I guess, will be double that for 2020. The trend for twice lower sales and twice as many losses is confirmed by the almost twice lower demand for reservations. In 2020, by the end of this quarter, brave travelers had booked approximately 146.9 million overnight stays or experiences, which is 41% less than last year. Chesky also mentions that in the second quarter of this year, the company experienced its sharpest decline in terms of demand for accommodation, 67%, compared to last year. And in this quarter, the decline massively improves to only 28%. For the last quarter of this year, in view of the increasing number of COVID-19 cases, the company mentioned that it expects more cancelled reservations and even bigger declines. Last but not least, we should take into account the huge debt of Airbnb. The company first took a loan of nearly $1 billion at an even more alarming 10% interest rate from Silver Lake and Sixth Street Partners, where it was valued at $80 billion. Nearly 50% less than its previous estimate of $31 billion. A week later, Chesky again asked for money from both banks, again worth $1 billion. This time, however, at a better agreed interest rate of 7.5%. In order to cope with its own situation in the current crazy time, Airbnb was forced to cut 25% of its staff, or somewhere around 1,900 people. What is more frightening is that the pandemic is not the only factor for the current losses. The regulatory framework is also not very favorable. In the first place, the hotels and Airbnb's competition are pushing regulators to tax Chesky's venture, saying it should be fair even for short stays to pay the fees and taxes that are inherent in larger hotel chains. In some places, Airbnb is even banned from providing its business model to local landlords. Why, you will ask? Well, under a different pretext. The mayor of Prague, for example, used the pandemic as an excuse for a while in February this year, but the answer can again be found in the lobby of larger hotel chains, similar to how the taxi lobby, for example, assisted Uber's failure in Sofia. Why should the IPO be in the current situation? The answer to this question is quite simple. The options of the current employees of the company will expire at the end of next month, and they insist that the IPO happens by the end of this year. Under this pressure, Airbnb will try to raise nearly $3 billion, which is the company's expenses for the last 9 months. On the positive side, at least these costs are 22% lower than last year. Conclusion. What we see based on Airbnb's financial situation is a company with serious long-term debt, garnered with an unpleasant interest rate, consecutive losses, and two main problems. One with the pandemic and the other with the regulators. You may be surprised by this statement, but despite all this, I'm a bull when it comes to Airbnb, solely because of the company's product. Following Peter Lynch's model and looking around, I hardly know a friend who stopped using Airbnb and instead makes a hotel reservation. It is cheaper, more comfortable, and more cozy. Chesky is fighting tooth and nail to keep a large part of the company to himself. The fact that he is the founder of the company and wants to control it, as well as continues to have an interest in having shares in it, leads me to think that he sees potential. Huge debt and losses are typical of any company in its initial stages. For example, Match Group or Netflix, which is not even cash flow positive. Regulators would also not be able to stop the future and its course of development. And as for the pandemic, I reckon this is just an opportunity to grab shares at a lower price. Airbnb has already proven that it can dig itself out of the current hole faster and more successfully than the competition, the hotels, and even registered a profit for the first time this quarter. In short, we have a great company with an amazing product, stable management, and in a pretty bad financial situation, which I hope will be temporary. I also speculate that the Robin Hooders will also attack Airbnb like wild animals. Whether I personally will shop a little more again? Well, that depends entirely and solely on the price at which it will be offered. As Buffett says, price is what you pay, value is what you get. Please like, comment and subscribe to the Wall Street Cat channel for more useful videos.